Bitcoin's current price is around $26,000, ending August on a relatively stable note. Looking ahead to September, historical data suggests mixed up performance for Bitcoin during this month, with only occasional positive returns. As for the upcoming Bitcoin halving in April 2024, historical patterns indicate the potential price for increases in the months leading up to it, with the exact outcome remaining uncertain. Bloomberg analyst Mike McMullen expresses caution about Bitcoin's short-term outlook, emphasizing the importance of considering market conditions and potential economic impacts. Welcome to CoinVantage. I'll be sharing fresh content regularly, so please feel free to like, subscribe, and comment. Your engagement fuels our content creation. And remember, this isn't financial advice. Investing in cryptocurrencies carries risks. It is crucial to consult a seasoned financial advisor before making any investment decisions. Let's delve into the Bitcoin market, shall we? Bitcoin's current value is hovering about $26,000 today, marking the end of August. Interestingly, Bitcoin's price has largely remained stable at approximately $26,000 throughout the entire month. Now let's keep an eye on how September unfolds. As for the Bitcoin Fear Greed Index, it still reflects a sense of fear at this point, although today's reading is slightly higher than yesterday's. Yesterday we were at 38 and today we are at 39. In my view, Bitcoin seems to be showing signs of an upward trend. So far, the Greed Index may follow suit in that direction. Now, shifting our focus to the upcoming Bitcoin halving scheduled for April 16, 2024, we have precisely 231 days until then, which translates to a little over 7 months into the future. To gain insight into what happened 7 months prior to the last two Bitcoin halvings, let's take a look at historical data. For instance, the first Bitcoin halving occurred in November 2012, and when Bitcoin was valued at around $12 per coin. Several months prior to that date, Bitcoin was trading at approximately $5 per coin. This means that within those 7 months, Bitcoin essentially doubled in value. Subsequently, following the Bitcoin halving, Bitcoin's price surged from $12 to $1,000, marking nearly a 100 times return on investment. Moving to the 2016 Bitcoin halving, which took place in July, Bitcoin's price was hovering around $650, with a relatively stable price of about $400 leading up to the event. This resulted in a return on investment of approximately 1.3 times, or just under 50%. Following the halving, Bitcoin skyrocketed from $650 to $20,000, generating an almost 8-fold increase in value. Now, let's discuss the third halving in May 2020. This event occurred shortly after the significant market downturn caused by the COVID-19 pandemic. On that day, Bitcoin's value plummeted by 50%. Fast forward to the day of the halving, Bitcoin was trading at just under $9,000. Today, it's trading at around $26,000. During these 7 months, the return on investment was well above 50%, approximately 1.5 times subsequently following the Bitcoin halving. The price surged from $9,000 to $69,000, making an almost 8-fold increase. As we anticipate the fourth Bitcoin halving in 2024, which is just a few months away, there's a possibility of a return ranging from 1.5 times to 2 times, with Bitcoin potentially reaching around $40,000 or even doubling to approximately $54,000. This presents an opportunity for those looking to accumulate more Bitcoin. Now let's take a step back and gain a broader perspective on Bitcoin's performance over a monthly time frame. August witnessed a 10% decline in Bitcoin's value, as it moved approximately $29,000 of its current price of around $26,000. As we look ahead to September, historical data reveals that this month has frequently been a period of underwhelming performance for Bitcoin. Only 2 out of every 10 Septembers have seen positive returns, and even those years experience only fleeting upticks. 2016 with a 6% increase and a 2015 with a 2% increase. While this historical data doesn't present an optimistic outlook for September, it's important to acknowledge that Bitcoin has a track record of defying conventional expectations. Now, let's move on and discuss the regulatory landscape for for Bitcoin in the United States. The SEC has an important deadline on September 1st where we'll find out the status of Bitwise's application. It's only a few days away. Additionally, on September 2nd, BlackRock will hold its annual conference. While the approval of Bitwise's application could set a precedent for BlackRock, it's important to acknowledge the cautious approach of regulatory bodies, especially given their history of rejecting previous Bitcoin ETF applications. BlackRock, being a major player, could potentially influence the outcome. Speaking of influential figures in the crypto space, let's shift our attention to BitBoy Crypto. He has recently launched his own cryptocurrency, Bencoin, and has been actively promoting it. However, Bencoin has experienced a significant decrease in value, losing 95% of its peak value and continuing to decline. With a 22% drop day, interestingly, BitBoy Crypto himself was reportedly removed from his own company, leading to amusing internet memes and discussions. Plan B has shared a collection of various graphs and it's quite intriguing. These charts encompass several models including the trend, 200-week moving average, momentum relative strength index, among others. While attempting to encapsulate all of this information in a single chart raises one's skepticism about its validity. Let's focus on the Bitcoin stock-to-follow model for a moment. It's worth noting that Bitcoin falls short of the predictions set by the Bitcoin stock-to-flow model. Initially proposed in early 2019, when Bitcoin was trading at around $4,000 to $5,000, this model projected a price of approximately $50,000. Since then, both Bitcoin and its popularity have seen significant growth. Looking ahead, the stock-to-flow model forecasts a value of $500,000 after the next Bitcoin halving. While the idea of reaching $500,000 is enticing, it's important to approach this projection with a degree of caution. It's crucial to remember that in every bear market, there comes a point of culmination, and when there's Bitcoin potential surpasses $500,000, there may be a subsequent drop, possibly below $200,000 or even $100,000. However, Plan B anticipates the median price within this market sector will settle around $300,000, which is still a significant figure. Now, let's turn our attention to a video featuring Bloomberg analyst Mike McMullen, where he discusses his perspective on Bitcoin's potential further decline. In this video, he mentions his recent noted titled Reversion Risk, where he referred to price targets of $7,000 for Bitcoin, $57 for crude oil, and $3,000 for the S&P 500. Since then, he has adjusted his oil forecast, but let's focus on Bitcoin. McMullen suggests the possibility of Bitcoin dipping below $8,000 in the short term. Despite his belief that Bitcoin is the best long-term asset, his short-term outlook is still cautious. To understand his perspective, he looks at the 50-week moving averages at the end of 2019, a critical reference point. Bitcoin was trading at around $10,000 before the significant injection of liquidity pushes prices to $69,000 before retracing. McMullen maintains a bearish view, emphasizing the importance of considering the market conditions preceding extraordinary events. He also highlights the price of crude oil, which was around $60 to $57 per barrel before these events, and is currently within the 10% of that range. When it comes to the S&P 500, McMullen suggests a standard correction could bring it down to approximately 3,000 points. He points out that the 50-week average in 2018, before the COVID-19 pandemic, was just below 3,000 when accounting for liquidity injections. McMullen acknowledges Bitcoin digital gold status and a long-term potential, but raises concern about its rapid short-term success, potentially fueled by the zero interest rate environment and market manipulations. Furthermore, McMullen notes that a generic economic downturn accompanied by a liquidity drain from all assets could negatively affect Bitcoin. He emphasizes the importance of monitoring whether Bitcoin starts exhibiting strength or behaves more like treasury bonds and gold in a deflationary environment. So far, such a pattern has not emerged. Regarding other cryptocurrencies, McMullen suggests that they may face regulatory challenges that could even lead some of them to drop to zero. In his view, Bitcoin holds a unique environment vital position in the cryptocurrency landscape. As we navigate the ever-changing world of cryptocurrencies, it's important to stay alert and flexible. Bitcoin, known for its surprises and ability to bounce back, continues to attract fans and investors. Whether we explore Bitcoin's price predictions and keep an eye on regulatory decisions or find humor in crypto news, the journey remains interesting and uncertain. So as we move forward, let's stay attentive to the market, celebrate successes, learn from challenges, and remember that the cryptocurrency world is a mix of art and science, full of possibilities and mysteries. If you enjoyed this video, make sure to give us a like and subscribe, and we will catch you on the next one.